Hey everyone, welcome back to Corporate Decoder, the place where we translate corporate mumbo jumbo into stuff you can actually use. Today we're diving into a proxy statement from Banc of California, and trust me, after the year they've had, their board meeting should be pretty interesting. Let's see if their leadership deserves a thumbs up or a thumbs down. So what's this proxy statement all about? It's basically Banc of California's way of asking its shareholders how they want to vote on some key issues, like who should be on the board, whether to approve the company's accounting firm, and how much the top executives should get paid. First, some basics. The annual meeting is set for May 7, 2025, and if you own stock on March 14, 2025, you get to vote. The main item electing 12 directors. Let's meet the nominees, shall we? The filing names, all 12 current directors, people like John Eggemeyer from Castle Creek Capital and Mary Curran, formerly with MUFG Union Bank. They've all got impressive backgrounds, but the key is whether they're truly independent and looking out for shareholder interests. For a board this big, you want to make sure there aren't too many yes people around. Speaking of independence, the company says that all directors except the CEO, Jared Wolf, are independent. That's pretty standard, as the CEO usually isn't deemed independent since, well, he is the CEO. It's a good sign that the board is mostly made up of people who aren't directly employed by the company. This helps with oversight. Who actually owns this bank? BlackRock, WP Clipper, GG14LP, and State Street Corporation are all big shareholders with over 5% of the stock. It's crucial to know who has the most say. These big investors can heavily influence company decisions. Now for the juicy stuff, executive pay. In 2024, Banc of California was focused on merging with PacWest Bancorp and turning the company around after the merger. They sold off $2 billion in what they call non-core civic loans, got more non-interest bearing deposits. That's good because it lowers their funding costs and shrunk their reliance on wholesale funding. Their net interest margin, which is a key measure of profitability for banks, went up a lot. They cut expenses by 36% compared to a normalized figure from the end of 2023. These all sounds good, but let's see how the numbers translated to pay for top execs. Alright, the moment of truth. CEO Jared Wolf's total compensation for 2024 was over $12 million. Digging a bit deeper, about half of that is in stock awards, with the rest being salary and a big bonus. Joseph Corder, the chief financial officer, made about $3 million. Now remember what I said about the 36% cuts in expenses. The big test is whether these cuts really improved the company's core financials or just made things look better on paper while maybe hollowing the company. So, should you approve the executive compensation? The board recommends you do. They say it aligns with the bank's long-term success. But as usual, remember this is their report, so they might be biased. As long as the profits go back into the bank and generate value in the future, this looks okay. Next up is ratifying the selection of Ernst & Young as the company's accounting firm. It's generally a rubber stamp, but important for transparency. Always vote yes on this, unless something smells fishy. Finally, a say-on-frequency vote on how often you get to vote on executive pay, every year, 2 years, or 3. The board recommends every year, and I agree here. More oversight equals more accountability. A quick glance at the fees paid to the accounting firms. Ernst & Young got around $4.4 million in 2024, while KPMG got around $4.8 million in 2023. Also consider these numbers are the total and do not say how effective they were. The board likes the idea of voting every year on executive compensation, more control over the people in charge, and that feels good. Beyond the financials, the bank touches on what it calls responsible business practices, like ethics and cybersecurity. All of these are great, but it doesn't look like they are ready to start measuring them. It's more of a PR move at this point. This section lists the core values: ethics, integrity, and accountability. These are fine, but let's see what they actually do, shall we? Finally, the bank says they are doing a bunch of work to support their communities with CRAE Community Reinvestment Act programs and $4.1 billion over 3 years allocated to that cause. So after all of that, what's my verdict on Banc of California? Here is my opinion. The company seems to be heading in a solid direction. They've made smart moves to improve profitability. I'd say they have a good plan and the team to execute it, but execution is what really counts. What is the real thing? We need time to see, and that's what really matters. However, there are some risks. All banks are facing the same issues these days, the interest rate situation. So stay tuned to the overall economic environment. If interest rate levels continue to drop, Banc of California might experience some real problems to its earnings. Overall, I'm cautiously optimistic about Banc of California's path, particularly post their major merger with PacWest. I like their focus and plan, but I'd like to see the plan through to completion and get a more full view in the numbers. Thanks for watching Corporate Decoder. I hope that this has helped you untangle this particular financial document. Let me know if you like the analysis. As usual, be sure to like, comment, and subscribe for future reports.